Assalamualaikum warahmatullahi wabarakatuh, and hi everyone. My name is NURSYAFIQAH binti SHAFIRUDIN and I am from AC2205H. Today, I will be presenting about the extract information from the question and the working.
My name is SITI Shafiqa binti ROSLI. My student ID is 2018414464. I'm from class AC2205H and I'm going to explain how to calculate the gain or loss on disposal.
Assalamualaikum and have a good day everyone. My name is IZZATUL binti JABAR from 5H. So in this presentation, I will discuss the effect of the implementation of the plan in the above question to the group financial statement as at 30 June 2019.
Assalamualaikum warahmatullahi wabarakatuh. I'm NORDIYANA binti ZAMRI. My student ID is 2018287504. I will present about calculation of goodwill.
Now, before we go to the working, we must extract the information from the question first. So from the question, Highland Berhad, a public limited company, financial year and every 30 June, is in the process of downsizing its business operations. So it said here that the financial year and every 30 June. The Chief Executive Officer of Highland Berhad plans to streamline its operations and suggests disposal of 90% of its holding in Tuah Berhad on 1 July 2018 for 160 million. 1 July 2018 is the date of disposal and the proceed received is 160 million. Highland Berhad holds 32 million units out of 40 million units of issued ordinary shares of RM1 each in Tuah Berhad, which were acquired in 2014 at a cost of 100 million. So this information is given for us to calculate the percent of control. The balance of Tuah Berhad's retained profit and general reserve on the date of acquisition were 42 million and 12 million respectively. So here is the pre-RP and pre-RR. The carrying values of Tuah net asset reflect their fair values at set for a piece of land which has a fair value of 20 million above the carrying value at the acquisition date. So on the acquisition date, the carrying value is less than the fair value, so this is the ARR. Goodwill on acquisition was remain unimpaired. The balance in the retained profit of Tuah Berhad on 1 July 2018 was 80 million and its forecast profit for the year ending 30 June 2019 is 20 million. So the 80 million is the RP brought forward and the 20 million is the profit for the year. Yes. The market price of Tuah Berhad's ordinary shares on the date of disposal was RM2 per share. So the question gives the market price for Tuah Berhad on the date of disposal. Balance on other accounts are expected to remain unchanged. Profits are deemed to accrue evenly throughout the year. So now let's proceed to working. Here is the extract information from the question. At the date of acquisition, DOA, which is 2014, 5 years ago, Highland holds 80% OSC of Tuah. So here Highland is a holding company and Tuah is subsidiary. 32 million over 40 divided by 32 million divided by 40 million units times 100, we get 80%. The OAC 40 million unit times 1 ringgit, we get 40 million. The consideration transfer is 100 million. The pre-RP and pre-GR is given 42 million, 12 million respectively. And we also have ARR, which is 20 million. On the date of disposal, DOD, on 1 July 2018, Highland disposed 90% holding in TUA. So how we calculate the disposal? 90% times by 32 million shares that Highland acquired in TUA, we get 28.8 million shares, and the remaining is 32 millions minus 28.8 million, we get 3.2 million share. 3.2 is the current share that Highland have. So the new percent of control is 3.2 million divided by 40 million times 100, we get 8%. So here we know that the condition or the term is from subsidiary to no relation at all. 80% subs to 8%, reduced by 72%. So here is the actual percent of disposal. It is not the 19%. Proceed received is 160 million. RP on DOD is 80 million. PAT, profit after tax, is 20 million. Market share price on DOD is 2 ringgit. So why we take the 80 million RP on DOD as the pre-RP? This is because the date of disposal is the same as the accounting period of financial statement. So we just take the RPBF as the pre-RP.
Hi, ADLIN here. So for question 3, there are 2 questions. A. Calculate the gain or losses on disposal of share for Highland Berhad. Before we calculate gain or losses on the disposal of share of Highland Berhad, we need to determine the goodwill. As usual, we do 3 columns which consist working, goodwill and NCI. By follow the format, first, consideration transfer on acquisition date, which is Highland Berhad issues ordinary share at cost amounting 100 million ringgit. And then we add NCI. The percentage of NCI upon acquisition is 20%, which is 100% minus with 80%. We use partial method, so before we multiply with NCI, we need to find the fair value of net asset of TUA Berhad at date on acquisition. In the question, we have ordinary share capital amounting 40 million ringgit, pre-return profit 42 million ringgit, pre-general reserve 12 million ringgit, and asset revaluation reserve of land 20 million ringgit. So the total of fair value net asset is 14 million ringgit. Then we calculate our NCI 20% multiple with fair value net asset 114 million ringgit, and we get 22.8 million ringgit. Consideration transferred of 100 million ringgit plus with NCI 22.8 million ringgit, we get 122.8 million ringgit. Oh, don't forget to add value 22.8 million ringgit in NCI column. Last but not least, to get amount of remaining goodwill, we need to minus 122.8 million ringgit minus with fair value of net asset 114 million ringgit. Then we get 8.8 million ringgit. Ta-da! We have remaining amount of goodwill. Don't forget to add 8.8 million ringgit in column goodwill as well. Move to gain or losses on disposal. Bye!
Okay, next for step 2, we will calculate gain or loss on disposal. Okay, first of all, create a table with 3 columns for information, workings and NCI. Okay, start with proceed received, which is 160 million. Okay, this amount we get from the extract of question earlier, and we need to add with the fair value of remaining share. Okay, to calculate the fair value of remaining share, we will take the new percentage of control, which is 8%, multiple with total share, 40 millions, and multiple with 2 ringgits, which is the price of the share. So we will get 6.4 millions. Take the 160 million plus with the 6.4 millions, so we will get 166.4 million. Okay, after that, we need to less the amount with the fair value net asset of Tua Berhad on the date of disposal. Okay, to calculate the fair value of net asset of Tua on the date of disposal, we need the information about ordinary share and pre-return profit. Okay, this information also we can get on the extract of question earlier, which is ordinary share capital is 40 million and the pre-return profit is 80 million. So we total up these two amounts and we will get 120 million. Before we transfer to the working columns, we need to multiple 120 million with the percentage of control of the company. So the percentage is 80%. So 120 million times 80% and we will get 96 million. But remember, we need to calculate the extra 20% also. So 20% multiple with 120 million, we will get 24 million. Okay, this 24 million we will transfer to NCI column. Okay, take the 166.4 million minus with the 96 million and we will get 70.4 million. But remember, we need to less with the remaining goodwill that we calculate on the step 1. So 70.4 million minus with remaining goodwill, which is 8.8 million. So we will get 61.6 million. So this positive value show a gain on disposal for Highland Berhad.
So, let's proceed to the final part of this presentation, which I will discuss the effect of the implementation of the plan to the group financial statement. Firstly, as you can see from the question earlier, the holding entity, which is Highland Berhad, disposed most of its interest but retained some in the investee, which is Tua Berhad, resulting the investment to become simple investment. Let's recap back to the calculation of the percentage earlier. The new percentage of control is 8%, which is lower than 50% and even lower than 20%. So, the status of subsidiary has changed to simple investment. In preparation of the group financial statement, the consolidation will only be up until the date of disposal. Where the investor loses control and deemed to have disposed most of its interest, the amount of goodwill will be written off against any gain or loss derived from the disposal of the shares. The amount of goodwill will not be appeared in the consolidated statement of financial position as the status has changed from subsidiary to simple investment. Next, for consolidation purposes, the gain or loss on disposal is actually a difference between the proceed received or proceed receivable with the fair value of net asset of subsidiary on the date of disposal, which related to the share of disposed of. From the implementation of the plan in the question, Tua Berhad has become simple investment. Therefore, any gain or loss derived from the disposal of the shares will be taken into group profit or loss statement and disclosed as income if it was a gain or disclosed as expenses if it was a loss. The same amount of the gain or loss will also be disclosed under the retained profit of holding in the scheduled approach. Okay, finally, for the last one, as for the group changes in equity statement, the non-controlling interest portion from the disposal of shares will be deducted under NCI column. The same amount of the NCI portion will also be disclosed in scheduled approach under NCI column. So that's all from question B, the effect of the implementation of the plan to the group statement.